The top business stories live from the Sky Newsroom. US chief executives denounce tariffs in earnings calls. We'll get the view from the boss of one of the world's biggest asset managers. In a blow to the Chancellor, Rachel Reeves' non-dom tax is predicted to cost more than it'll raise. I will explain why the Church of England is threatening to sell its £83 million worth of shares in McDonald's. Very good morning on this Tuesday, Business Live with me, Darren McCaffrey. I'm going to begin with the recent sell-off in US shares following Donald Trump's volatile trade policies. As institutional investors flee Wall Street, can America keep the title of the safe haven for equities that it has been for years? Well, one of the world's biggest asset managers is Charles Schwab. Today, it's launching a new UK investment platform aimed at improving access to US markets, and Richard Finn is its UK Managing Director and joins me now. Richard, very good morning to you. Just first of all, talk us through what this platform is for UK investors, what you're aiming to do with it, and the United States, because, you know, many people will be looking at the volatility that we've seen there over the last couple of months.
Yeah, morning, Darren. Thank you for having me on. This is actually an addition to our existing investment platform. We've been serving UK investors for the last 30 plus years and helping them access the US market. What we've seen in the last 10 years in particular is a real boom in US investing across the UK. And one of the challenges that retail investors have with the US is just an abundance of choice. There are, including the OTC markets, over 12,000 listed companies in America. And so what we have done in recent years is develop a proprietary software that allows for investors to make decisions about their investments and identify companies along a series of investment themes. So what we're launching today for our UK clients is an investment tool that does the analysis for them to identify companies that operate in certain areas. And that could be big data, it could be fast food, it could be pets, it could be artificial intelligence. It helps investors find companies that are operating in areas that they're interested in. And that's something that we've heard from our clients that they want. They want to see analysis that helps them choose companies over the next 10, 20 years.
And Richard, is this for people who are already investors, in the sense that, you know, there's been a concerted effort actually by the government and others in recent times to get people in the UK to invest more in stock markets, particularly here at home, but indeed elsewhere, because we're just not as good as, for example, the Americans are doing that?
Yeah, I wouldn't say we're not as good. I'd say we're just probably a little bit behind America. You know, I think the company that I work for was one of the real kind of pioneers of online retail investing for clients in the US. And because it was able to push commissions down year on year through scale, really through the 1980s and 1990s, a whole generation of people were introduced to investing through that period and have benefited as a result. And so what we want to do in the UK and all around the world, we serve 35 million investors all across the world, is to help other markets and other countries really catch up with the US investment philosophy and help people who might not otherwise understand the value of investing or might have felt that it was something that was too expensive or something for people who are wealthier than them, and just to help them give them access and take control of their financial future. One
of the concerns, which are clearly for retail investors, will be about returns and concerns about volatility, and it's been quite a roller coaster ride this year. How much does that weigh, do you think, on your sense of the American market? I mean, you know, lots of people suggesting that kind of American exceptionalism is kind of somewhat over. Can you guarantee that roller coaster ride is not over? You can't, clearly, and you can't guarantee that there'll be the same returns that we've seen over the last decade or so.
Darren, you're absolutely right. There are no guarantees in investing whatsoever. But there are some simple philosophies that can help investors through times of excessive volatility, such as the one we're in right now. Diversification is key, and education is really, really important. Helping investors understand how to manage risk is something which is really important to us. It has been since we started this company in the 1970s. And of course, over the last 50 years, there have been periods of intense volatility, not dissimilar to this, maybe for different reasons, but where you see, real uncertainty, real fear about what could happen to people's portfolios. That's when having a broker advisor that is going to help you understand how to manage risk is really, really important. And it's one thing, as I would suggest, about the UK and trying to promote investing across the UK market. It's to help, the government needs to understand that people need to be educated better at school, through university, as they begin their investment journey. To understand risk and understand the risk of inertia as well is really important.
Yeah, indeed. And I know this platform is to prove access to US markets, but frankly, should people watching this program, people who might want to invest in the stock market, what about here? Is there an opportunity for London amidst the turmoil in the United States?
Well, there's always an opportunity. I mean, the one thing I would point to as a result of this turmoil is that it's highlighted the interconnectedness of the global marketplace more than ever. And so when you look at companies from the UK that list in the US, when you look at the significant number of US companies that have large operations here, you realize we're all linked. And so the UK government, I don't think necessarily needs to position itself as an alternative or in competition to global markets, but rather to take advantage of its unique skill set, its position in the world, both geographically and economically, and to help the UK people, the UK population, understand better how to look after their money, how to protect it, and how to plug into the global economy. So there's a definite opportunity for UK investors beyond UK companies, in particular, but also just for the UK government to look around the world and to promote UK investing in a different.
But just very finally and briefly on this, Richard, isn't that the problem though? There are a lot of really good experts in the field of all this whose job is trying to predict outcomes and trends and whatever. That's impossible at the moment with Donald Trump in the White House. I mean, people around him don't know what he's going to do next. And so that uncertainty it's incomparable to what we've seen in the past, I would suggest.
It's very difficult, if not impossible, to predict what the White House is going to do on a day-to-day basis. That's absolutely clear. But what isn't impossible is to use the historic themes and the philosophies of investing in terms of diversification and risk management that would ensure that your portfolio and your investments have the protections in place that are needed to help manage against this volatility. And one thing I would say, Darren, I was talking about this last night at dinner with some friends. We talk about what's happened recently in America, but 12 months ago from today, as of the close of business last night, the S&P is up 9% over that period. Now, you wouldn't imagine that based on a lot of the commentary that we've seen in the last month or two. But that's a fact. And the reality is that a lot of people get caught up in the day-to-day noise without looking at the longer term. And I think that's one thing investors need to return to.
OK, Richard, really appreciate your time this morning. Richard Flynn there. Thank you.
Thank you.
Let's bring up to some of the other business stories today. And the food delivery firm Deliveroo is to be sold to the US-based DoorDash for £2.9 billion. The deal, which is still subject to regulatory and shareholder approval, pays a 29% premium on Deliveroo's share price. Both companies combined had a gross order value of roughly $90 billion last year and 50 million monthly active users combined. Ford has warned of the tolls Donald Trump's tariffs are having on profits. The carmaker suspended its full-year guidance and predicted the import duties will hit earnings by $1.5 billion. Ford's chief executive, Jim Farley, said the company was aiming to build more car parts in the United States, but predicted a $2.5 billion gross tariff hit. ChatGPT maker OpenAI is to remain a not-for-profit organisation, following criticism from co-founder Elon Musk. The company said it would instead change the status of its for-profit subsidiary. AI's chief executive, Sam Altman, said the decision was not motivated by outside pressure. Veteran investor Warren Buffett has announced he is to step down from Berkshire Hathaway as its chief executive. The 94-year-old built the company from a failing textile maker into an investment juggernaut worth $1.16 trillion. He has announced that the vice chairman, Greg Abel, will take over the reins. Now, the British film industry has warned of dire consequences for creative workers after Donald Trump announced a 100% tariff on non-US movies. The president hopes to reinvigorate the film production in Hollywood, which has fallen by some 40% in the last decade. Let's speak to Chris Southworth. He's General Secretary of the International Chamber of Commerce UK. Very good morning to you, Chris. Just give us a sense, if you've got any better sense, of what Donald Trump is announcing here. What is the definition of a US film these days?
Yeah, that's a great question. I mean, look, tariffs are bad for business and consumers, full stop. This time, obviously, we're hearing about tariffs on film. The impacts are going to fall heavily on the likes of Canada, UK, New Zealand, Australia, who have deep collaboration with the US film industry. And just to put that in focus in the UK, we're talking about £5.6 billion of economic value. And that's grown 56% since 2023. So it's one of our fastest growing sectors. It's a real jewel in the crown of the UK economy, and overall contributes over £12 billion to UK growth. So it's super important for us. There's a number of issues with this. I mean, it doesn't make a great deal of sense. It's worth pointing out it's another example of the US withdrawing from the international system. There is currently a ban on all duties and tariffs on digital content crossing borders, and the US is a signatory of that. So it's going against that agreed ban at the World Trade Organization. But it's also wrong to say that the UK is undermining Hollywood.
Well, is it, Chris? Just on that point, I mean, you look at the drop, and I was reading an article last week actually about how many of the movie studios, in Hollywood are now empty. And part of that reason is the significant tax breaks we give to Hollywood filmmakers and others to make things here in the UK. I mean, we are using our tax system to attract work here, aren't we?
We are giving tax breaks, but they're nothing like the scale of the US. US has over 70 tax breaks and subsidy schemes for the US film industry. The UK can never compete with anything of that kind of scale. The two, UK and US film industries are hugely combined, works, very, very complementary, in a very complementary fashion. If you think for the big blockbusters, Star Wars, Mission Impossible, Avatar, to name a few, these are where the US studios are coming to the UK for specialist skills and locations, for that matter, in production or whether it's special effects. So, we're not working against the US, and the issues in Hollywood are nothing to do with the UK. That's about high costs, labor challenges. There have been big strikes in the US, and a changing landscape within the film industry and programming industry, where companies are going to all sorts of locations and places around the world for specialist skills, and the UK is a big centre of that.
And Chris, just in regards to if this comes in some form or another, I mean, is the hope, are you talking to the UK government about trying to make this part of this deal that's been much talked about, but we've little evidence of it yet, between the US and the UK when it comes to trade?
Well, I've just got off the phone to the Department for Business and Trade this morning asking exactly that question. They're not going to give away the details, of course.
Oh,
but I think
come on, why not?
Absolutely. Well, we should be absolutely confident there's a deep dialogue going on between the UK and US. There's a lot of conversation going on around the idea of a digital economy agreement or something of that effect. And obviously, the film industry, like a lot of the creative and services industries, data and the movement of information across borders is really, really important. So I think the government will be seeking to deepen collaboration, deepen the relationships, because we should really be working together more intensively, not going into a conflict and going head to head. That doesn't make any sense for the UK or the US.
OK, Chris, appreciate your time this morning, and I'm sure we'll have you on when you can tell us what was in that telephone conversation. Chris Southworth there. Thank you very much indeed. Now, in a blow to the Chancellor, new research predicts that the non-dom tax hike that Labour introduced is likely to lose the Treasury more money than it raises. The Independent Centre for Economics and Business Research estimates the reforms would cost the public finances around £700 million quid per year if a third of non-doms were to leave the country. Joining me now is Sam Miley, forecasting lead at the Centre for Economics and Business Research. And it gets worse. I think if more than half of non-doms leave, the Treasury starts losing money.
Good morning. Yes, so our research has estimated the returns that the Treasury could make from the recently implemented changes to the non-domiciled regime. And in fact, we predict that if more than a quarter of those non-doms were to leave the UK, that is the tipping point at which the Treasury will begin to make a loss on this policy.
And Sam, just give us a sense of the numbers involved in this. They're quite significant, particularly at a time in which we talk about how little headroom, if you like, the Chancellor currently has.
Yes, so naturally non-domiciled people are high net worth individuals, and the expansion of their tax liability by the recent reforms does raise the possibility of significant returns to the Treasury. But ultimately, with their high net worth, they're also significantly internationally mobile individuals, and they could go and relocate to any number of different jurisdictions to base their day-to-day activities. And it's that which poses the significant risk to the Treasury. For if they were to relocate, then all of their assets would also go with them.
What's the solution to this, though? Because, you know, there'll be people watching going, this is a tax exemption essentially for the wealthiest who can, frankly, some would argue, can afford it. We get the fact they're mobile. Politically, this is good for a Labour government, isn't it? Do you think, I mean, what does the government do? Does it have to U-turn potentially on this?
It's, of course, a difficult balancing act between ensuring that a tax system is fair to all parties, but also acknowledging that there are gains to be made from providing incentives to certain groups of people with their high net worth. These people tend to be wealth creators. They tend to support employment. They tend to be high spenders, engaging in philanthropic activities. So the potential benefits of keeping these people domiciled in the UK is something that needs to be thought about very carefully.
I suppose that's the question is, what's your sense? I don't know whether you've carried out research into this about where that balance should be and if at the moment, and you'd have to conclude the answer would be yes, that the balance is not working.
Well, our study does show that the previously non-domiciled people are contributing significantly to the UK economy, both in terms of receipts, but also general activity. So they contribute significantly more in income tax, capital gains tax than the average taxpayer. And as a result, they are making a significant contribution already to the UK coffers.
OK, Sam, thank you very much indeed for that. Sam Miley there. Thank you. Now, let's bring you up to date with some more of the stories from the business pages today. And Shell is reportedly considering a takeover bid for oil and gas rival BP in what could be one of the biggest deals in history of the industry. In February, BP announced plans to scale back renewable energy investment and focus on oil and gas production as part of its strategic overhaul. The Church of England has threatened to sell its £83 million worth of shares in McDonald's, and as the fast food chain engages more with church concerns around modern-day slavery. Dame Sarah Thornton, an anti-slavery consultant to the church's asset manager, has accused the restaurant of using trafficked workers from the Czech Republic and enforcing excessive working hours. You get more on that and indeed the rest of the day's morning news. Who knew that the Church of England owns so much of Mackie D's? Just scan the QR code on your screen right now to access our money blog on the Sky News website or indeed on the Sky News app. OK, you're watching Business Live here on Sky News. Coming up in just a couple of minutes, we'll be looking at how the markets are doing this morning. FTSE down a fraction. All the details after this quick break. Stay tuned.
a secret hospital hidden in the Myanmar jungle, treating the victims of this bloody war. This is Myanmar today. Its military rulers don't want the world to see, but we have.
I fight for my own future. I fight for my generation's future.
This is an actual crime.
They don't care for that.
Myanmar army is only a couple of kilometers away. So this is a major humanitarian disaster.
This is the game changer seat. Look, it even comes with binoculars. Fly Emirates, fly better.
Very welcome back to Business Live. Let's have a look at the market. Joining me is JM Fin's Investment Director, Lucy Coates. Lucy, good morning to you. Talk to me about Deliveroo. Quite a big deal today, finally over the line with that big US company.
Yeah, indeed. So we've had confirmation that DoorDash in the US is going to take over Deliveroo. It's a FTSE 250 company, but here in sort of the UK and Europe, the sort of home delivery market is really fragmented. Whereas if you look at the US, we have DoorDash and we've got in Asia sort of Meituan. So it's a lot more fragmented, so there's a lot more opportunity. But yeah, Deliveroo's had a poor period as being a listed company. It came to the market in 2021 during the sort of COVID era. And of course, demand for home delivery was hugely high. And since then, competition has intensified and demand has fallen. And so its shares reflect that, and they're trading at less than half their IPO price. So DoorDash sees an opportunity.
Talking about big deals, I mean, this will be a hell of a deal between Shell and BP that I was talking about just before the break. Yeah,
indeed. I mean, I think, you know, it is an opportunity for Shell, but it will be hugely complicated to execute. And, you know, for the CEO to actually say they're going to wait for BP's share price to weaken before they do anything is a little tricky to understand. You know, BP has materially underperformed. I think the shares are down sort of 32% in the last 12 months, whereas Shell continues to progress. But Shell CEO has emphatically said he would prefer to buy back the shares in Shell rather than go through the acquisition. But we should wait and see. It certainly will be good to watch from the sidelines.
Yeah, it really will, indeed. Let's talk a little bit about politics if we can, because in Germany today, Friedrich Merz was expected to become Chancellor, and that hasn't happened, which is quite significant for Europe's largest economy.
It is, and you know, when I was preparing for this piece, Darren, you know, I'd sort of written, good news. You know, Friedrich Merz is the new Chancellor, and you know, he's off to go meet, other European leaders tomorrow. But he didn't get the vote, and we're really not quite sure what's going to happen next or when the next vote's going to happen. But it certainly isn't an endorsement, and that's created uncertainty where we've seen European markets and stocks sort of just soften a bit because we're all a bit sensitive to getting some sort of certainty in Europe's largest economy.
Yeah, indeed. And I think the vote has to happen within 2 weeks. But as you say, it is not a good start, even if he does manage to get over the line in regards to uncertainty. Just briefly, Lucy, before you go, a big week here in the UK, not least of all when it comes to interest rate decisions on Thursday.
Yeah, I mean, the market's pricing in 25 basis point cut, so, 0.25% down to 4.25. But there are a couple of members who I think would be pushing for a 50 basis point cut. And, I've looked at numbers and forecasts of where we expect interest rates to be in the UK throughout the rest of the year, and they're hugely varied. But we think, they could go as low as sort of 3.5%. So, we'll wait and see. But certainly the trajectory is down.
OK. Lucy, as always, appreciate your time this morning. Lucy Coates there. Thank you.
Thank you.
OK, well, that is it from me on Business Live for this morning. We're due to be back at 4:30 this afternoon. Do join me then if you can. Up next, though, it is a gun salute at midday, live from London's Hyde Park. The King's Troop Royal Horse Artillery will fire a 41-gun royal salute. That is to celebrate the second anniversary of the King's coronation. Of course, it falls in the middle of events marking the anniversary of VE Day in Europe, which is officially on this Thursday. But we're expecting a 41-gun salute live at midday from Hyde Park to mark the second anniversary of the King's coronation. We will have that live on Sky News in just a couple of minutes. And as I say, I will see you a little later on today.